Hi, this is Mark with my analysis for the week commencing the 4th of September. Now, at the beginning of the year, on the 4th of January, I hosted a webinar session where I was talking about my bias for the year ahead. And I was explaining that I was closely watching the dollar index and it had broken through major previous support resistance, the 200 EMA, prior to Christmas. And then throughout the year, we have continued to watch this. And it's been very useful for us to get us into a lot of winning Swissy trades of late. Then last week I said be very careful because we were at a double top and I suspected that that would remain in place until or unless we saw the NFP. And as we saw on Friday, NFP came out positive, and this time the jobs data was positive as well when you dug into the news. The previous month, most of the jobs were part-time in hospitality, low wage, and there'd actually been a drop in full-time work. Well, the reports I've seen so far are suggesting that this report is a good one. The sectors where people are getting employed, there's 2 jobs available for everybody looking for work. And this is, it's confusing at the moment because technically the US is in a recession despite the government's attempts to change the definition, which is farcical. But there are still storm clouds. Posted on Friday from an article from Alf Pekatila, I think he's called, ex-bond trader, used to manage $1 billion bond fund. This guy knows what he's talking about. The bond market is giving clues that the US recession is going to get worse. So it is confusing and it's definitely worth reading that. I also did an update of my view on stocks and crypto and forex as well. And Ashley posted he had a very good week. And this time of year, generally I find the run up to Christmas is the most profitable part of the year. So despite the fact that things are messy, it does not mean that we cannot make profits. And the calendar for last week, this was the jobs figure. Yes, it was mixed because average hourly earnings were down. And if people are earning less money, then that's not good for growth, but then again it's good for inflation. And then this bit, some anomaly with US jobs, I never understand this, but even though there were more jobs created than not, the unemployment rate went up. However, for the week ahead, it's a messy, tricky week. You've got Canadian and US Labor Day holiday on Monday, and therefore a big chunk of the market traders will be missing. And it certainly means that the USD CAD will be potentially either completely asleep or completely wild. So it's quite, best advice is to leave the CAD alone. Aussie this week is tricky because you've got the rate statement on Tuesday, you've got GDP on Wednesday, and you've got Governor Lowe speaking on Thursday. So that could be a bit tricky. You've then got monetary policy meeting for the UK and the rate statement for Canada. So we're going to have to tiptoe around this lot, guys. And then particularly on Thursday morning, don't be trading the euro until or after the ECB press conference. It's anticipated they're going to raise rates by 0.75%. If they do more than that, could bomb the market one way or the other. If they don't go as high, that could affect it. Bottom line is you are gambling, not trading, if you try to trade through this kind of news announcement. Finally, on Friday is Canadian employment and unemployment rate. So depending on what happens there and what happens this week with Canada will determine whether the USD is set to go on a run now that it's broken that major 130. So let's have a look at the charts now for some interesting setups for the week ahead. So this is that dollar index, and now that we've broken higher, I am now going to move my fib and follow it along. And in here, if the dollar drops during the week for any reason, here would be the sweet spot in terms of looking for entries on the dollar Swissy to go long and to go short on the euro. So keep your eye on this. If it just keeps going up, then it may mean, unfortunately, we've missed the Swissy. And talking of missed, I still am not short the euro. I've said all along I think the Eurozone is financially screwed. It can't carry on. At the moment, the issue is if there is a ceasefire in the Ukraine, that could cause a temporary rally. And if the EU come up with a deal to, I suspect what's going to happen with the EU and the UK, they're going to have to come up with some kind of deal to offset the rise in the energy prices. There was a guy on Twitter on Friday who runs pubs in the UK, and one of his bars the electricity bill is going up from 5,000 per month to 35,000. It is not sustainable. Hospitality got slaughtered through the COVID crisis. Now they've come out the other end. They employ most of the young people who are going to end up paying for COVID as well. So it is massive what's going on at the moment. But if there's some kind of deal, and it will be a kick the can down the road again, probably some kind of special bond whereby it'll be paid back in the future. If that comes out, then this could rally. And any rally in the euro is an opportunity to short for me, because it doesn't change the overall situation is that the Eurozone financially is in a very bad place for reasons I've explained ad nauseum in the past. So I can't short it down here because I have nowhere for the stop. If we get a milder pullback, then I will definitely be looking to short anywhere around 1.0170 for multiple reasons as usual. And any move higher, if we get an extraordinary announcement, I will definitely be looking for that, and I will update you during the week. VIX at the minute, the fear index is down. Natural gas made new highs the week before. This engulfing candle suggests it's going to drop. That would be good for Europe temporarily. Oil is still hovering around 90, 87, 90 a barrel. If this goes on a run, that would be good for inflation as well, at least temporarily. It's also a good opportunity to buy into oil companies if that's your thing. S&Ps continued to drop. I explained ad nauseum again. Look back in previous live sessions and analysis. When it got up here, I didn't subscribe to this idea at all. I think the American economy is in a bad place and going to get worse, and this made no logical sense for me to long it. Now gold is interesting again. It has bounced off the 200 EMA once again. Said before, 1700 is an area I have bought quite heavily in the past, and mining stocks as well. Another clue here, this is on a daily. Metals, gold and silver, the RSI does seem to be important. You can see multiple occasions when price has reacted and bounced away once we've got down into the RSI below 30. Almost got there the other day. And silver is a similar thing. Now, I've been looking at silver on a monthly. The back up the truck and buy as much silver as you possibly can for me is here at 14. However, at the moment it's 18, but on a monthly it's broken through the 200. At the minute it's an indecision candle on here, but this is a very significant area. However, RSI, once again, is giving a clue that this may be a bottom and back up again. But as explained a lot as well, I have been buying a lot of mining stocks to give me leverage in this sector. Ultimately, if the stock markets continue to tank, I believe gold and silver will be the final safe haven. Aussie Swissy, made you a video on Wednesday or Thursday. Ashley did well out of this last week, and so did I. I'll check that out. For now, I will be looking to short again. I think I was in two areas again last week with this. 67.40 and 67.30. That's the area for me interested to short. Maybe 67.20, second area this week. Multiple reasons, and it was good for the stop as well. Check out that video from Friday. Euro New Zealand, I was also in this one, and again there is a video showing what I did. I would be interested to short here at 64, 164, and also if it shoots higher at 164.80. My bias still at the moment is to short this pair. Dollar Swissy, I've just shown you, if the dollar index drops, then use that as a clue to get into the dollar Swissy. I placed an order here last week, it didn't fire. Do not leave pending orders over the weekend. There is always the danger for an extraordinary event that you could jump your stop. So this is bad practice, but it's just me on a demo for teaching purposes. The dollar Swissy, I would long at 96.30, and if it drops lower, anywhere around 95.20, I would be in hard here. As ever, keep your eye on that dollar index. This was a trend line break the other week. This is why I've got in here. Now, actually, I need to move this a little to 96.50 now as the 55 is moving up. Trend line break, 55 rolling up, 200 rolling up in a bull market. Dollar index on the way up, dollar strength all round, Eurozone on its knees. As you know, if this is going up, the euro is going down 90+% of the time. That is why I want that one. CAD. Finally, it has broken through 130, which I have cautioned around because it's taken it 2 years to do it. I would have preferred it to have broken above the recent high, but this does now get interesting. But the caveat, of course, is all that news this week. So for me, if it gets down to 129.60, I would long the USD CAD, but not around the news. If it drops further, I would still be looking to long. I wouldn't short it at the moment, guys, because this could be on for a run up. And I remember trading this a few years back at 140 plus. So this is a significant break on the USD CAD. Aussie dollar on a weekly missed it last week by a handful. We're in a clear downtrend still. We had a break of the trend line previously. Looking at this on the daily, I will need to bring my entry down this week to 69.40, and the potential reward on this is half decent. Some of the other Aussie cross pairs might even be better than this week. But remember, a lot of Aussie news this week is going to make it tricky. Now, the pound. At the start of this year, I'd sold a property in Spain. I converted all my euros and pounds into dollars, which has proved to be a good move, in that I'm probably up 15-16% on capital this year, and it's non-taxable because it's just having it in a different currency. I want to short the pound. The British economy is not in a good place. Again, a lot of this depends on what the government are going to do about fuel. Truss or Sunak will be announced as the new Prime Minister next week, and whoever it is, the first priority has got to be to deal with this power situation. Again, I suspect the government's going to get involved because, as I told you earlier, we're looking at pubs, restaurants, cafes that are barely getting by, and suddenly we're looking at a 5-6-fold increase in electricity. It's just not sustainable, which would lead to businesses crashing, less tax revenue, higher social security payments going out. Real potential mess for the UK unless they get their act together. So we could be on for a relief rally, which is what we're looking for. First area of interest for a short is around 117, and this really is based more on a 4-hour chart because we're still miles away from anything. So I would watch here at 117, 116.80. It's the area to watch. I would prefer a bigger pullback, and a bigger pullback would be way back up here. So if we get a rally, because we've got a new Prime Minister and they've been on holiday for the last 2 months in the UK, Boris went on holiday, has not been back, then the bigger pullback would be up here at 120, and I would definitely be in here. And this has the potential to be hitting 110 before Christmas, possibly even parity if they don't get their act together quickly. Euro pound, I'm not confident with this. I mean, technically it's broken higher. It doesn't make a great deal of sense. Both of these economies are in the same place. But if the Eurozone announced the gas deal sooner than the UK, maybe that would support this theory. For now, I'm going to leave it. 1085.70, these are just areas to watch. Clearly the 200 EMA 86 area to watch. Issue as ever, miles away from anything from a stop. And this is just politically so dependent on the news this week. Euro Aussie is a lot clearer. We're in a down channel. This has the potential for making 450 pips with a 40 pip stop. So 1 to 10 risk reward ratio. Much better idea. No guarantee it's going to work, but I do have multiple reasons to believe it's going to struggle at the very least here. And if I have to add a fib from the recent high to the recent low, I've now got 78.6 fib up there as well. So that is a much better setup for me currently on the euro. New Zealand dollar, again, needs a big pullback all the way to 65.60. Intraday, watch 61.90. But again, you're struggling for this multiple reasons for the stop. AUD NZD, I would watch at 1.11, but that needs to be on a shorter time frame. Bigger area for a pullback would be all the way down at 110.40. Pound Aussie, not my cup of tea, but Ashley does trade this. I'm guessing he will be looking for a short at 171.80, but he will update you about that in the forum. EuroCAD, another one that looks far more interesting. EuroCAD for a potential short at 137.20. Stop above the EMAs, bunching in here. That potential risk reward ratio once again is very good. I think for this, I had this the other day, I had this split. So I had one order in here with the stop here, and then the second order in here with the stop up here. It is, however, a long way away at the minute, so the likelihood of that this week is slim, unless there's an overreaction about the fuel, or if there was a ceasefire in the Ukraine. Pound CAD, need a pullback, 155 is the area. Aussie CAD, another interesting one, perhaps more interesting than AUD. This needs to move down now, so I would have the order entry at 91.15, and I would split it in half, and I would have half at 90.80 with a potential 300 pip drop on that one. Other than that, pound New Zealand, now it's stuck on a trend line. Pound yen, I really don't like this pair. CAD Swissy, it has broken. Somebody asked me to look at this. Didn't then break 78.6, so that's make your mind up. New Zealand Swissy, much more interesting for a short at 6,200, 162. Dollar yen, I've missed all of this move, but it's not my favourite pair. I would be interested to long this, but I need a pullback, and 135, 136 is the area to be watching. Aussie yen, again, you need a pullback, and I would be interested to long this at 91.60. Euro yen, area to watch, again, not the favourite pair, but definitely an area to watch, is 137.74. At the minute, there is a trend line in here that has broken, so may not get all the way down, but those are definitely ones to watch this week, and I think the other two, yeah. That's it for the week ahead. As I said at the beginning of this, just be very, very careful with this news scenario this week, guys. Monday could be very slow. Friday we don't trade. And then there's this ton of news in the middle. AUD, we may just have to leave it alone this week. And CAD, be very careful. Okay, have a great week. I will see you in the live training session on Tuesday.